I got interested in Bitcoin and crypto because of a dog walk in November 2020. At a high level, what happened is a prior conversation 10 years earlier with a guy named John Burbank had embarrassed me because he said to me, Sebastian, we don't do more business with the CSFB because you guys haven't shown me something I've never seen before. Like, show me something I've never seen before. And this was the guy that got the housing trade, the housing short right. This was the guy that got the industrialization in 2009 in China right. This was a guy that got major new things right. And he looked at us and said we weren't showing him what he'd never seen before. So then I was on a dog walk with my next door neighbor, Eric Peters. And short story is he showed me something I'd never seen before. What actually happened is we were taking a break from Thanksgiving and we were walking our dogs and he walked away to take a phone call. He said, it's a really important call. I got to make a trade. And I was really confused because it was Thanksgiving. And I thought all the markets were closed. He came back. He said, I just traded $50 million of Bitcoin. And I thought, what's Bitcoin? I mean, I'd heard of it, but I didn't understand. I said, hey, when does the market close for Bitcoin if you're trading it today? And he looked at me like, dude, you have no idea. You've never seen this before. And it was in that moment I remembered that conversation with John Burbank at Passport, back in my early days at CSFB, where I thought, oh, shoot, this is something new. Like, this is something I've never seen before. I need to stop, don't judge, listen, and see if there might be something important here that maybe merits a little bit more study.
So how did you dive deeper in? Did he become like a mentor for you in this space?
So Eric is, Eric and I actually ended up working together. But before that, Eric sent me a bunch of papers that had been sent to him, right?
Yeah.
So he forwarded me the white paper for Bitcoin. He forwarded me a letter that John Pfeffer had written, I think back in like 2016 or 2017. And he forwarded me a few other things, and I started down the as then Twitter, now X, rabbit hole, and found my own inspirations as well. And it was interesting. Both he and I were interested in Bitcoin primarily because of a macro perspective to start with, right? So it was 2020. You had novel joining of fiscal and monetary policy at the same time, which was undoubtedly going to be inflationary, and indeed it was, right? And you looked at Bitcoin as this unique asset, right, which is incredibly secure and limited in supply, and it was obviously something that could become a way to sop up capacity in an excess paper market, right, which is what was going to happen with dollars and QE in general, right? So Eric definitely was a big part of that for me. It's definitely Eric that got me first considering Bitcoin seriously. I'd heard of it before in the past, and I never really took it that seriously. But I, like everyone else in the U.S. market, kind of didn't understand how the system maybe worked for me, but not for everybody, right?
So when did the thought of building something in this space come to you? Like, because there's the education, you could just go and buy stuff. There's lots of people that have heard about it, buy cryptocurrency. But when did it become, I actually have some ideas for this space, or, I want to contribute to it?
So the idea to build in and around Bitcoin actually came relatively quickly when we were together at One River and One River Digital. There was an initial idea to focus on asset management products that provide access, but we looked at that and said, okay, we'll do those things, but we'll also consider the infrastructure that might need to be built on top of these new digital rails, right? Part of that was also influenced by our advisory council at the time. So we were really blessed to have a special advisory council, which you won't believe it when I tell you. So we had Jay Clayton, who's the former chair of the SEC. He led our advisory council, right?
Right.
We also had a guy named Kevin Hassett on our advisory council, who, as of December 1, 2025, is currently the front runner to be the next Fed chair, right? And these guys were on our advisory council giving us perspective, and it was priceless. So we thought about building infrastructure relatively quickly because of some of the things we saw and some of the things our advisors saw. So one of the things that we did very shortly after One River Digital got started was to build a project called Bridge, which eventually became the guts, basically the core of Coinbase's tokenization engine, right? And the idea then was to take the advantages of crypto, and instead of doing tokenization, where you basically take an off-chain asset and stick it, create an on-chain representation, say, wait a second, let's take this activity and put it all on chain, right? To make the token the security, essentially, um, and get all the benefits and none of the downsides of crypto. So that's what led us the to build in the Abu Dhabi Reg Lab in ADGM, Abu Dhabi Global Markets, started back in 2022. So we were building in and around the space earlier because we just saw that there was some massive space that was still as of yet unclaimed, and we thought, well, if not us, then like who? So we tried.
So why focus on the public market so much, and changing the way that cryptocurrency is interacted with through public markets? Why that area?
Oh, so why focus today on Reserve
Yeah.
One and the focus on what we expect to be a publicly traded company? We're still in the SEC process, so
Yeah.
we're not live yet. Look, I think that the potential for crypto is very large, but to bring crypto markets and TradFi markets together, both have to basically evolve and give a little. And that process is happening. And I think the being part of a public company also is part of that process. So what I mean by that specifically is the next wave of capital that I think is likely to come into crypto probably needs some simplicity and regulation alongside it to make it a little bit easier, right? And just acting perhaps in a slightly different way, right? So from our perspective, we think that a digital asset treasury that has multiple assets, right? Bordering on diversified, although everyone's definition is a little bit different. But uh, a digital asset treasury with multiple assets is probably more akin to what most traditional investors are do in their regular portfolio, right? And if you look at almost all of the digital asset treasuries today, they're generally single asset, right?
Mm.
And for the most part, traditional investors don't invest that way. And our perspective is that to really bring in the next wave of capital into this ecosystem, you're probably going to need to build a different access point, and that's some of the basis for the creation of Reserve One.
So you think that the access is just not it's not as great as it can be right now?
Access is improving, but it is still complex for a lot of people, right?
Yeah.
So this asset class, if you are to invest in and around it, requires a fundamentally different means of interaction, right?
Mm.
So, or can require that. And that is basically a big issue for a lot of traditional investors. If you are a registered investment advisor, you generally operate out of, a known subset of funds and custodians and exchanges, right? This asset class has a completely different set of those entities, right? And those vehicles. And that is an impediment for investors. Think of it this way. Some institutional investors only have one custodian, right?
Mhm.
And so for them to directly hold Bitcoin, if they wanted to, they would need to get another custodian, generally speaking, because their custodian doesn't yet support Bitcoin, right? Well, that's a major structural impediment. Now, if you have an equity, then that issue goes away because the custodian can custody a traditional equity, right? So there's structural barriers to the adoption of crypto from traditional market players today. Those will erode over time, but you know, time is a funny thing. Like I remember when I was just talking to the folks over at iShares in the early 2000s, and they said they were going to kill the mutual fund by like the end of the year. Now, 20 years later, mutual funds still have at least 50% market share in US retail, right? ETFs have taken massive share, but these big shifts take way more time than we would otherwise expect.
Yeah, they do, but I mean there's changes that happen, fairly quickly. But I mean, I don't know about replacements like that. Like the mutual fund is so important still to the market today. I mean, do you see yourself in Reserve One replacing something that's existing today, or is it more just about creating a new opportunity?
a great question. Today, we would expect that you reserve one as an investment opportunity for investors once we're publicly listed, probably to be something that would be additional to what they can do today, right? The intention for Reserve One is to offer a potential upgrade to what is otherwise available to them. So if they can buy a Bitcoin ETF or they can buy an Ethereum ETF, well, once launched, we expect that Reserve One may have more diversification than what they have on offer. So it could become an upgrade to what they are presently, to their current opportunities. I think that's today. Longer term, we don't know how traditional markets and digital markets are going to truly converge, right? Today they're actually quite separate, right? In very few places can you trade crypto and traditional instruments. I mean, yes, you can trade a future at the CME, right? But
Yeah.
that's about it. In general, these markets are still, for the most part, quite separate. So Reserve One as an entity, the intention here is that we're providing an additive investment opportunity for folks who want to get invested in this upgrade of our financial services system.
How do you see stuff like staking kind of playing a part of this, and like, I mean, and lending as well? I mean, the crypto lending scene is quite different than the traditional lending scene with the third party that you don't really need the same kind of validation. Within the traditional world, you could just kind of have these third parties that function there. Like, is that something you really are interested in a lot? And how do you see that stuff working?
Yeah. So backing up on the overall topic of yield generation, it is the intention of Reserve One to deploy our assets to the degree to which we can for to seek yield, whether it's Bitcoin, Ethereum, Solana, Cardano, Ripple, or other assets that we end up adding over time if we do. Um, in terms of lending and staking, lending there's a lot of similarities to the traditional system, and in fact, when you're doing something that doesn't look similar, that's when you know there might be a problem, right?
Yeah,
Um, and so there, I guess maybe to back up, it might be useful for viewers to understand yields in crypto are not like yields in TradFi. They're completely different. Let me explain what that means. In TradFi, like in regular markets, when the S&P is down a ton, right? What's normally happening is high yield companies, so junkier companies, the spreads on their debt go up. Meaning if you put an incremental dollar into a high yield bond, you're getting a bigger return when risk appetite is low, right? That's the traditional system. In crypto, it's the opposite, right? So when Bitcoin is ripping, it's been up a ton, let's say in the last year, in the last month in particular, then when you go to lend, right, your rates are actually higher when Bitcoin has strong positive momentum, and your rates are actually lower when risk sentiment is negative. And so yield itself is a little bit different in crypto. It's quite interesting. It's to borrow a kind of an overwrought term, orthogonal, very different, right? Crypto yield is very different than traditional yield. So in and of itself, it's also additive to, or should be additive to a traditional portfolio because the way it behaves, the risks it has are different. Now, different can also be a risk, and that's one of the areas where we pay a lot of attention.
yeah. It's still such a new space, but there's the upside is like incredible. I mean, there's so much potential from yield that I think that the traditional retail investor, just probably is completely unaware of, or not even exposed to.
Well, I think, look, crypto is interesting because it actually has been led by retail, right?
Mhm.
So there are a lot of prosumers, high net worth traders, and they've actually led this market in many ways, right? Because they are less constrained by some of the rules that constrain institutional investors. And that retail involvement and the kind of various different regulatory environments has led to a faster innovation cycle in crypto than we see in traditional financial markets, right? If something's bad in crypto, we find out really fast because there's no central bank, there's no lender of last resort, right? There is no backstop to this space. If something is faulty, like we find out real quick, right? So October 10th in 2025 was essentially a flash crash in our space, and that exposed some structural, some bad designs in certain parts of the market. Um, So it's true that some aspects of retail are completely on the outside looking in, right? Let's say the grayer the hair and the more traditional they are, the more they've basically not been involved at all, right? But it's also true that retail, in some sense, has driven a lot of a lot of the innovation, a lot of inspiration in the space because there's an aspect of retail that moves real fast
Yeah.
and it has a high risk appetite and is willing to look at new ideas and fund new ideas, with their TVL, total value locked, really fast.
No, that makes sense. And yeah, I think it's just all about finding that consumer that is really looking for the access here in the form that you have. I mean, in terms of like just Reserve One and the kind of the big picture
Hmm.
vision for it, Sebastian, like, I mean, I know on the website you've got like kind of a couple stages of developments of things that you're doing, but once you do get this approval and you are a public company, like what does it look like at that point? Like, what are the developments you're focusing on most?
Sure. One of the things that we want to do with Reserve One is really help people own the upgrade across both the liquid portfolio and the illiquid VC portfolio. And so one of the things that we're looking at is where we can look at innovations that we want to invest in our VC side of our book that also could benefit from us deploying our larger side of our book, our liquid book, meaning, can we put our assets into a new protocol, right? That helps to catalyze a new network, right? We're looking at a couple instances of newer networks that are built around Taproot to more basically that make Bitcoin programmable in a true sense, right? Instead of having your Bitcoin at a custodian and having it wrapped and that sort of thing. This is an idea where it took a long time to get there, but we look at this as a way by which we can deploy our Bitcoin and be the catalyst for a network that we believe in, right? And we could essentially benefit on both sides of our book, but to own that upgrade of making Bitcoin more programmable. So we're looking at things like that where there might be synergies between the long side of the liquid book and the illiquid book,
Huh.
where both are good ideas by themselves, but it's a better idea if we do them together.
And now, just I mean, with approvals and stuff, you expect it to just be much easier with crypto, just with the current structure of things today.
When you say much easier, what do you mean by much easier? I'm curious because I think
It's still not
we're
easy.
actually entering. Well, I think are we talking about a regulatory environment or are we
Yeah,
talking
regulatory.
about yeah, so I think the crypto space is in an awkward position right now, hopefully getting better. But the awkwardness is this. We approved Genius. Genius is the stablecoin bill. So we know what a legal programmable dollar looks like in the United States of America, right? We know we're going to have legal stablecoins used everywhere, right? And for example, that's happening today with PayPal, right? On my Venmo app, I pressed two buttons inside of a minute, and my Venmo balance was moved into a PYUSD stablecoin. That's amazing, right? Crypto has the chance to take off if it really disappears, and that's an example of it, right? Figure's done some things similar to that. But why is it awkward? It's awkward because we've passed genius, but we have not passed clarity, right? That's akin to the government saying, okay, this rail car that does one thing, payments, is legal, but I haven't told you what rails are legal.
Yeah.
So the rail car is legal, but we don't know exactly why Solana and Ethereum are commodities, not securities, right? And so I think that's the awkward part. Now the good news is that both sides of this political environment in the U.S. want to see something done, maybe for different reasons, but they want to see something done, right? So the most recent important thing that happened, and this is a little bit inside baseball, is that Senator Booker was put in charge of the Senate Agricultural Committee, and that's very important because he is motivated to help them do a Senate agricultural version of Clarity. There's already a Senate financial version, but we need both. Why do we need both? Because Senate Ag sits on top of the CFTC, and Senate Finance sits on top of the SEC. And these two committees have to get together and say, this is the version of Clarity we think is okay, right? Senate Finance had already done one, Ag hadn't. Their version just came out recently. We're not where we thought we would be. Like everyone thought we would be done with Clarity in October, and now it's
Yeah.
December, right? We're not where we thought we would be. But the good news is, despite all the political rhetoric and anxiety over, some of the administration's activities in crypto, not the administration, pardon me, but like personal family members, etc. That's obviously created a lot of concern in the marketplace. What's great to see is that both Democrats and Republicans really feel like they have to get this done. And we are hopeful that we do see clarity past somewhere, February or March this year.
It's good. Yeah. Well, Sebastian, that was all the questions that I had. I appreciate you taking the time and doing this. I think it's exciting that you're creating this new vehicle for people to enter into this space and to get access to a lot of the potential of it. And I'm excited to see when it goes public and what's to come from you guys then. So looking forward to what's next.
Ben, thanks for your time. Great to see you.